Ladies and gentlemen, we have the august presence of one of the most pioneering tech visionaries ever. Please put your hands together to welcome on stage none other than Sri Nandan Nilekani, co-founder Infosys and former chairman UIDAI.
Hi, guys. So today I'll speak about the Finternet. Now you're wondering what is this Finternet, whether it's a spelling mistake or whatever. But what we'll present today in the course of the next half an hour is a vision for the future of the financial system. And I hope you'll be able to get a sense of it here. We know that there's been tremendous innovation in financial services around the world, in payments, in lending, cross-border transactions, data sharing, open banking, all kinds of things. And we know this is happening around the world. In India, of course, we have the great example of NPCI and the amazing success they've had with UPI. But we have, we have mobile app, Apple Pay, or you have Pix in Brazil, or you have Stripe, or Visa, whatever. The point is that around the world, SWIFT, my friends from SWIFT are here, so I think what we're seeing is enormous innovation around the world over the last 30, 40 years. But more and more, in some sense, the financial system is not able to cope with the demands of users. Users want more choice, more control. They want to be able to do things as easily as everything else they do in their life. Everybody wants universal banking. You want different types of assets. You could have deposits, you could have real estate, you have art, you have NFTs, all kinds of assets that you need to manage. And we know that we have lots of global systems. Everybody is in their own silo. Now, cleaning all this up will take 100 years. To give an example, NPCI and under RBI leadership has tied up with PayNow under mass leadership in Singapore. That would have taken a few years to do. Imagine if you're going to build these bilateral pipes between countries. It'll go on forever. So is there a way of doing this very differently? And what is happening today is that we have purpose-driven pipes. So person to merchant, there's one pipe. G2P, there's one pipe. P2P is another pipe. And all this is creating siloed, slow, and expensive systems because we're building a new road for each type of application. Now, what happens, we have seen, is that when technology becomes more sophisticated, there is a time when we have all these various siloed solutions working, and then all of a sudden, they come together and change things. If you remember, those of you of my generation will remember that before the internet, you had all kinds of competing technologies. You had SNA, OSI, this, that. And there was an alphabet soup of communication technologies. And out of all that emerged TCP/IP as a superior way of doing things. And now that is dominating the world. In those days, every company had its own email. And you couldn't send email to each other. Today, we have an SMTP protocol, and you can send an email to anybody in the world. The same thing happened in devices. In the 20 years back, we had Palm Pilot, we had Nokia phones, we had Blackberries. Everybody was doing their own thing. It's only in the late 2008-9 with iPhone and Android that we came up with the notion of a single device with an app store, which collapsed everything into it, whether it's a camera, a dictaphone, everything came into that. So what we find is that when you get this convergence of technology, you can unlock exponential value. So is there something we can do in the financial area? And therefore, what we talk about the Finternet is a new approach to global finance, which is defined with 3 U's. It is user-centric. It puts the user at the heart of what we want to solve, because users want more control over their lives, over their assets, over their destiny. It has to be unified, which means that it should cut across all asset classes. It could be shares, it could be bonds, it could be deposits, it could be paintings, it could be horses, doesn't matter. All kinds of asset classes should all come together. And you need an universal infrastructure on which all of this works. And sometimes we underestimate the value of universal infrastructure. Today, if somebody has come to GFF from New York, they go to their hotel, connect the laptop, and they start the email. They don't question the fact that behind the scenes, there is a universal infrastructure which makes this possible. Can something similar be done for financial services? And we want to have Finternet is something which allows everyone to participate and control all kinds of assets. User-controlled assets, user content, NFTs, attested assets, which are certified by somebody, registered assets like land, or regulated assets like financial products. All of them should be able to participate in this economy, and we need a good way of protecting them from the downsides. So in the real world, we actually have tokens. When you get a paper file from somebody, which is a property file, everything about that property is in that file. So when you give that file to somebody else, you're able to take it forward, or you can keep it in the cupboard, right? Now, in the digital world, we actually broke this up with databases and code and so on. Now, with tokens or tokenization, we can have self-described, self-contained packets that have all the attributes of that asset. So in some sense, we're going back to the future. We're going back to the world, except that instead of a paper file, we have a token packet. Now, why is this possible? Because of advances in cryptography. Cryptography allows you immutability, which means you cannot change. You can make sure nobody can change that packet using a blockchain. It's verifiable, it has security, and it has privacy. Now, all these things were applied in the world of cryptocurrency and so on. And so we have 16,000 cryptocurrencies and so on. But in some sense, these cryptocurrencies were outside the regulated system. So they were in their own planet. And we have seen some of the consequences of that. What we need to do is bring the power of cryptography, the power of tokenization to our world, our regulated world, where we have rules, where we have regulations, where we have anti-money laundering, where we have KYC. All these things have to be there. In other words, can we think of a way to combine the best of a regulated world with the best that tokenization technology can offer us? And that's what the Finternet does, because it uses these basic constructs of tokens and then enables universal interoperability and composability. What do I mean by that? Interoperability in the sense tokens can be bought and sold across different ledgers and so on. And composability means you can combine different kinds of assets to create a full transaction. So let me explain some more. So what is this Finternet architecture we are proposing? First, put the user or the business at the center of the equation. Second, give them applications. Otherwise, how do they talk to the system? They have variety of applications. And now we're very familiar with the idea of applications that we all use for different purposes. Third, we have existing actors, banks, companies, asset managers. They all exist, they all do the business. But in the world of the Finternet, they also are token managers because they are able to take their respective asset and tokenize it. In other words, a bank can tokenize a deposit, a company can tokenize some asset manager can tokenize a mutual fund. All of them can do that. So there's a way for them to do that. And all these tokens that belong to either individuals or companies, tokenized deposits, equity, or real estate, will all be on a unified ledger. Now, the unified ledger is not one ledger. There could be multiple ledgers. There are multiple ledgers of different technologies. So it's not saying use only Ethereum or this or that. It can be any underlying ledger. And there will be protocols for interledger transactions. So if I sell a tokenized deposit to somebody else, that can be done from my ledger to that person's ledger. And then to make all this happen, you have all kinds of trust services today. For example, if you buy a piece of art, somebody gives a provenance certificate saying this is a genuine piece of art. Or if I buy real estate, somebody certifies that, and so on. So we have people who provide trust services who are all talking to each other. Now, what this does is now we have two levels of trust in such a system. The tokenization itself, because of its immutability and other features, is one level of trust. So if I take a bank and tokenize a deposit, that deposit carries with it all the attributes of that token, and it's immutable, so it can't be changed. It can be sold very easily. And second, the trust service providers provide an additional layer of trust, so we can create a very high trust system. Now, this system can be very high volume. So you can build a very high volume, low cost transaction system, being able to do billions of transactions of different kinds of assets tokenized, but all transacted in the same way. This is a very important point, that no matter which asset class it is, I can convert it to a standard way of doing things, and then use the standard token engine for doing it. So think of it is you have a car, you have an old engine, you remove the engine, and you airdrop a new high-performance engine. That's what we're doing here. It's a very simple, very elegant way of taking our financial systems to a whole new dimension. And by doing this, you reduce friction to usage, you reduce friction to adoption, and at any point, even when I sell my tokenized deposit to somebody else, that person can go back and de-tokenize it with the bank. So you can always go back and forth. So that way, it's not like a parallel economy. It's really nothing but a tokenized representation of the real world. But when you take a particular deposit and tokenize it, the bank will mark that this is already tokenized, and therefore you can't do anything else with it. So it has to operate either in the tokenized world or in the real world. But you can go back and forth. It's a very elegant way of combining the today's world with the best power of cryptography. And above all this, of course, is trust and governance. So all this will work within the regulated system. So whether it's the regulators, whether it's the government, whether it's international bodies, they all have a view into what's happening. So that's why you're combining the best of both worlds. Now let's take a few use cases. So Maya is a creator setting up a new business. She needs some capital to start. In the old days, she wants a loan against property. You would do paper-based, unreliable due diligence. You know what it is like to get a loan. In this new world, Maya would take her documents, maybe the house papers, tokenize them, give them access, and somebody will give she can get a loan against that. All that will happen in a tokenized world. And then once the loan is given, that documents can be locked and kept in a non-tamperable way and always taken out when you want to. Or she wants trade insurance for de-risking her cash flow. Here again, instead of doing all that paper-based stuff, she can create a token and get the insurance for the invoices that she has, and then all the settlements can happen immediately. Or if you have, suppose she wants a government grant, then again, she can apply for a grant for a solar-powered office, get a tokenized verification, and issue the token. And then she can apply for global carbon credits, because this is now verifiable, authenticated data that she has implemented an energy-saving platform. So these are all ways you can do it in this new world of the Finternet. Finternet also enables efficient dispute resolution, because you have the full provenance of all the assets. You can resolve it very easily. Just to give you a sense, today in India, 10% of the cases in our judicial system are check bouncing cases. 10%. Imagine if you had online dispute resolution for all these things, then you'd be able to dramatically reduce the whole cost of conflict resolution in the financial system. So what is important here is separation of individuals or consumers or businesses from governance, from technology. So essentially, we are separating this out and putting the technology as a universal layer below with no pretensions of creating some parallel economy. They are playing the role of enabling the Finternet to succeed. All the governance rules are at the governance layer, so every transaction in this system will follow the rules of the appropriate regulator, appropriate government rules are all applied at the governance level. So it's safe and secure by design. It's designed fully with public authorities, and it provides for different kinds of trust providers, be it attestation or be it a provenance of art or whatever. Interestingly, the paper on Finternet was written by Mr. Augustine Carstens, the general manager and CEO of BIS, and I am the co-author with him. Paper was done entirely with the support of Dr. Pramod Verma and Siddharth Shetty. But the fact that the general manager of BIS, which is the central bank of central bankers, has shown this, shows how much it is very much a mainstream idea, that this is something that central bankers want. Now, is tokenization something new? Not really. The crypto world has seen tokenization for quite some time. And even today, we are doing different kinds of asset tokenization. In fact, India is doing a great experiment in CBDC under the leadership of RBI, and NPCI is implementing tokenization for the last 1-2 years. So we are doing many things in this space. But our feeling was you need an overweening holistic architecture which allows it to be user-centric, which allows multiple asset classes to be interoperable, and which creates a universal architecture for ledgers, how you write a token to the ledger, how you transfer a token, how do you do interledger protocols. All that can be standardized. Because one thing we have learned is when you unlock friction, you have an explosion of market usage. And if we continue to just try it in bits and pieces, you will not be able to unlock the friction. If you have a holistic architecture which cuts across all asset classes and unlocks it using similar APIs, similar schemas, and everything is spelled out, then suddenly it will unlock huge amount of business activity. So Finternet is like a network of networks. It really connects individuals and businesses. It's across, it can be a global thing. It's basically universal rails with permission flows. Universal rails is the technology part of it. Permission flows is the governance part of it. Now, so far it sounds, okay, all this is great, but so what? This is not just an architecture or a paper. It is actually coming together on the ground. We already have Finternet labs coming up in different parts of the world who are working on it. There's tremendous energy here. There are lots of global hackathons happening. There are a lot of local ecosystems which are coming together. And all that is really coming to life. So Finternet is not just an idea. It is getting implemented as we speak around the world. And we have open source sandbox. Developers can build apps. Financial institutions can manage tokens, or public authorities, regulators can observe. All this is already there in our GitHub and other places. And we already have a community of companies around the world working on this. addressing different parts of the Finternet issue, user applications, ledgers, how to do programmatic compliance. So everybody is looking at different parts of the problem, and we are orchestrating, bringing all these ideas together. So while it's an ambitious vision, we'll actually do it step by step. And, would you guys like to be part of this? Yeah, all right. So to show you that it's for real, I'm going to ask my colleague and young friend, Siddharth Shetty, to give you a demo of how an actual Finternet application will look like, or two demos.
Yeah, if they can bring up the demo as well, please. I always get goosebumps after Nandan speaks because it's sort of like a peek into the future, what's going to play out. So out here, what we felt we would show all of you, in addition to what so far has been an abstract concept known as the Finternet, is really bringing this down to code. If you had to prototype this, what would it look like? This journey is not going to be quick. I mean, we see this playing out over the next 10 years. But if we actually had to get to working prototypes, working code, how are you going to bring different asset classes together, which today have multiple silos, multiple different settlement systems? Is that even possible? So the first step is really, imagine I'm an individual, and my first gateway into the Finternet is my wallet application. But a wallet that could be a holder of credentials, holder of money, holder of different property records. And so in this case, I'm just signing up with one wallet application. This is not my real number in case anyone's taking note for privacy reasons. But out here, I'm very simply going to create a basic wallet. It doesn't require any KYC because I'm not doing any financial transactions. I'm just authenticating. And so a key construct within the Finternet is how do you layer compliance? Depending on the type of transaction, then can I attach corresponding KYC proofs, so on and so forth. So now I've signed up. It's as simple as that. I've got my own Finternet QR code. What happens next? The next step is I want to use this to participate in the flow of money. In this case, I go to another application. And this is an application that can be built by any developer. The apps are fundamentally not regulated within the Finternet. The flows are regulated. The issuers are regulated. And so any third-party developer creates one. In this case, MyFin is one of those. I sign in. And now that I've signed in, I want to tokenize my existing banking deposits, as it's traditionally known. Deposit not really meaning fixed deposit, but savings account, current account, so on and so forth, right? So in this case, I choose ABC Bank. ABC Bank can say, this is the limit. If I have a balance of 10,000 rupees, I'm allowed to tokenize maybe 2,000 of those rupees as per regulatory norms. And so in this case, I have tokenized that amount, and it's available for me to transact as INR within the Finternet. I don't have to use any other form of cryptocurrency. In this case now, I want to transfer some of this to Nandan. And I feel Nandan works extremely hard, so I'm going to programmatically attach a use case that he can only use this for entertainment-related purposes like tickets. But you could attach many other use cases. I mean, you could really explode this to programmatically doing government payouts, programmatically choosing, instead of expecting a farmer to have a title deed, as the governor spoke about a few days back, you can programmatically control the end use of money, all on common universal infrastructure, not purpose-specific siloed systems or one app that does this. And so in this case, I'm transferring 2,000 rupees. I authenticate. In real time, 2,000 rupees has been transferred. And this playground is completely open sourced. You can see in this case, we integrated with one ledger, which was Solana. And the transaction shows up that you can actually take a look at. Right? Now, there's a lot more work that needs to go into this. But this is a basic flow of money transfer that's been made programmable. The second step, as you heard Nandan speak about, was an individual wanting access to a loan against a property. And as we all know today, physically those property records get locked in a locker. And so, again, some entrepreneur creates their own property application. My prop is an example of that. I go ahead, register with them. I decide to get started. Now, because in the Finternet, you have the ability to add verifiable credentials, all your traditional property documents, ownership certificate, no objection certificate, valuation records, can get digitally attached. So I'm giving my permission to share these records. And when they get shared, they can go to the corresponding lender once it's been tokenized. So I decide to request for a loan, share those tokenized data points. I'm proceeding to share it with the lender. I can see those loan offers, right? So the lender can now underwrite against verifiable, authentic data that's been issued by whoever they trust. I view the loan offer, I select it, I decide to sign it. If you actually zoom in, we do believe a lot of contracts will evolve with more variable clauses such that it's linked back to the underlying smart contracts. But I sign the loan agreement, and in real time, that property gets locked, and the amount is dispersed into my wallet, the same wallet. I'm not going again into n different applications. And so this is really how it comes together. Some of you may be wondering, how did even the bank come on board the Finternet? So we created a very quick prototype of that. You can imagine your bank as a token manager decides, OK, I want to enable for my customers a current account product, which is nothing but a set of smart contracts. I choose the type of account. I choose my rules against this. I choose the corresponding configurations attached to that account, the limits that are applicable, KYC required, does this work for cross-border or not, and I can in real time deploy that. And once it's deployed, then transactions start to get basically audited against that. So if you see the previous transactions which happened against a savings account, you can actually get into more and more details of that, of the transaction. Banks may report it, freeze it. So all of those layers, this is just a very, very basic prototype, but it just shows what is possible when you unify the underlying infrastructure and unleash that back to innovators. So that's an overview of the demo. Quickly, behind the scenes, how it works, because sometimes you get questions saying, that looks exactly how I transfer money today. There's the same questions UPI got saying, I could do it over IMPS. What's different? Seems like a very small delta. So that's the reason why we thought we'll show you a quick peek without getting too much into the details. But really what's happening is you now have unifying infrastructure that allows you to do settlements. That's what the unified ledger does. That's unbundled from the technology and the apps on top. And that's a simple flow for money. And similarly, this is a simple flow for property. And the last thing I would add, a key part of the Finternet design, is how do you, in an asynchronous manner, allow for different participants to come in? Property registrars, for example, in India, are state-governed. And so it's not like they're all going to join the same table, and all of them are going to come on board at the same point in time. So architecturally, how do you allow for each of these authorities to plug in? But when they do plug in, they are part of a larger interoperable whole. And that's really the core idea behind the Finternet. So I'll hand it back to Nandan. Thank you so much.
Thank you. So you can see that this is not just theory. People right now, there's a dynamic global community of developers who are actually building things, debugging these things to show how it will work. And this was just in April where this paper was launched in Washington with Mr. Augustine Carstens of BIS. And there were 3 other central bankers, the governors of Germany, Brazil, and Korea. So they were all part of this launch. And there are 2 papers that you can look at, the paper by Augustine and myself, and then there's a paper by Pramod, Siddharth, and myself on the technology. They're complementary documents. The first one is an architecture document. The second one is a technology document. Please read it if you can. And everything you want to know is on this. I'm going to leave this here so that you guys can, see the QR code. And this is a movement. This is not 1 year or 2 years, this could be multiple years. But this movement, we believe, is the beginning of the transformation of the financial system by taking the traditional financial system, marrying it to the power of cryptography, and creating a whole new user-centric, universal, unified way of doing finance in the 21st century. Thank you very much.